What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for July 19th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day in the week ahead in this glorious market in which we are currently in. Now, with that being said, remember to hit the like button and share with your friends and family so everybody can get a little bit educated on some stocks, because we do a little bit of everything around here to get you prepared. So now, with all the big old spiel, what do we got today? Interesting day. There's a lot of information, even aside from what I shared with you guys yesterday in the weekly updates. There's a lot of big things going on this week, but we got some more interesting details today. First thing I want to state is that the ECB does have essentially their monetary policy is coming out. Their rate raises are coming out on Thursday. It's going to be Thursday morning. I'm not sure specifics on time, but I know it's Thursday morning. I don't know if it's pre-market or around just after our open. But you have to be aware that they have been increasing rates at a rapid pace. And considering that they haven't touched rates, I think, in like a decade, this is a very much a concern, because we are dealing with a global issue here. It's not just within the U.S. And so this is what is making this very historic, right? We all went through a pandemic. Now we're dealing with the consequences of money printing, and essentially what the pandemic came up with as far as supply issues with supply chains, trying to catch up, now having a war. There's tons of other stuff going on. But with that all being said, ECB Thursday. They're going to see if they raise rates on Thursday. This is going to be critical if they raise rates. The last time they raised rates, we ended up doing a very historic 75-point basis move on the last meeting. So we have that on Thursday. That is very critical as into seeing what is happening. Now, the next big piece that we just got today, I've been talking about Google, I've been talking about Microsoft, I've been talking about Tesla. They are starting to lay off and not pay so much towards future projects, as they are dialing back all these stocks. All your big corporations are stock splitting because of what's to come. And then today, Apple announces that they are going to be cutting back, that they won't be hiring as much. They're not going to be spending as much due to essentially they didn't label as future, but essentially concerns for the future, what could potentially happen. So they are dialing back. That put the market in a frenzy. Now, this is something you have to keep in mind because of the fact that the market right now, as it stands, was in earnings mode. And you can see that there is no positive news that's really going on. I mean, we are getting some positive in the banks. I know Goldman Sachs crushed it today, and they were running, and then the market sentiment just stalled everything. BA started running. Tesla attempted to run. There's a lot of stocks. Shop had a big rip this morning. Amazon had a big rip this morning. And then Apple dropped that, and that was it. Apple's essentially been one of the safe havens for tech, and just in general. Apple's been a safe haven. We saw that in the beginning of the year. Apple, and I think it was Facebook in the beginning of the year, pulled a lot of the weight for tech when Tesla and everything else was going on, was falling down, and the rest of the market seemed like it was just falling apart. They tried to hold up the market. Now, finding out that they're having a lot of issues with production of chips, because China keeps locking down. There's more threats of lockdowns in China. It's a bunch of issues coming up. So their earnings is, I don't believe next week, but the week after. It'll be the last week of July. With all that being said, we are in a very critical part. I don't think there's anything at this point that doesn't point. If you haven't gotten the message already, we are going into recession. That is what's happening. You've had plenty of red flags for a while. Even for myself, it took me a while to kind of say, okay, well, now we're going to go into recession. As soon as I figured out that, hey, we haven't hit peak inflation, that's when essentially my gear flipped, and I was like, okay, well, that means that You're going to have summer. You're going to get more inflation. There's going to be more issues. Yes, money printing and all that adds is inflation, right? That's what causes inflation. But when you're really dealing with supply issue like oil and oil driving everything, that's going to drive up inflation even more to the extent to where it is now. And then you also have uh, the EU on their oil maintenance lines as well. And if something goes wrong with that, right, where are they going to get supply? Where are they going to get more oil from? Everybody is tapped out because of Russia right now and what they're doing right now and wreaking havoc. So again, very interesting week. We just started. It's just Monday. A lot could come up. A lot can come up, and that is what is critical here. Is that now we have earnings. Tomorrow we have Netflix. Now Netflix has been, like I stated before, Netflix is after close tomorrow, but Netflix has been essentially trending down over the past year and some change since kind of like the pandemic, like kind of stopped. But then we had that additional year, and we kind of stay locked down and really restrictive. They started really losing a lot of momentum, and then there was that one show that came out. I don't recall the name of the show that came out, the popular show that essentially brought some popularity back to Netflix and helped them increase their numbers to an extent. So nonetheless, everything is their expectations are extremely low tomorrow. So if they do anything over that, Netflix could pop. And that just goes over the general market sentiment. Everything is extremely low, but you have to understand that it is really, really bad to the point to where anything is a positive. Any kind of sign of hope is a positive for the market. And so the market's been running off of that. And even this attempted to the pre-earnings run has just been essentially oblivious. It hasn't even been here, right? It's attempted to, but then we continue to get really bad data pointing to recession, driving recession fears. Now, obviously, you don't have the Fed this week because they have a blackout period before the meeting. So you don't have them. They try to, like I said, they tried to come on last week and try to help alleviate everybody and say, hey, no, it's okay, so that the market can pump and get in kind of alley. Essentially, try to build margin because of the fact that next week, if we get a 100-point basis move or even a 75-point basis move, you're looking at the market could get into panic at that point. And these numbers, the Apple news that came out today, you're putting the market more into panic. People are going to stop buying. Prices are too high. They don't know what's going to happen. People are getting laid off. People don't know where they're going to get money from. These are the issues that we're currently sitting in. With all that being said, this could really drive us into a really bad space really fast. And even though I do believe we are going into a recession, if we're already in somewhat of a recession, I believe we're on the early stages. I do believe that we can come out of this very quickly, though, because of lessons learned throughout our history, through the technology that we have. I think we can come out of this very quickly. But we have to watch and see what happens from this point. So all being said, it's very interesting what we do from here, and where we go for this week, because now we got Netflix. Again, I'm not really worried about Netflix. My key is Wednesday. ASML, I'm not really worried. TSM did really good. I think ASML could do really good as well. But Tesla is my concern. My concern is with the lockdowns in China, with the dollar being so extremely high, gas prices going up, right? They're going to be our first real test of tech. Tesla's overcome a lot. So for me to even think that they might come under, especially when Elon's been kind of throwing up the red flags saying, hey, it's going to get very bad. I'm sure he sees something in his data that is showing him that things are getting bad and they're going to get really bad. That's why they started dialing back. One of the first ones to start dialing back, I believe, on cuts. And you see it in the banks. The banks have been laying off people too. This is what's concerning. And so, with that being said, let me get off and kind of look at the technical wise. Like I said, we could have played technical straight here. I mean, this was a retest. There was a lot of resistance. I was talking about this last week. We got an actual push straight up to the trend line, though. It got rejected pretty hard. Now we're getting news, and we sold off hard. And the question is if we open up essentially below the 38, I think this thing is going to flush, and then we get a pretty heavy flush down on 37.20. I think potentially tomorrow. So I think now you're going to get panic if your best. I say Tesla all the time because I believe they've evolved and done extremely well over the pandemic. Apple has too, but with Apple being that safe haven, because Apple's been around for such a long time, that if they are cutting back, if they have concerns, this is going to be an issue, right? And everybody should have seen this with the stock splits that are coming out, with all the other CEOs coming out talking about the layoffs, and they're holding off projects and supply issues and the never-ending war. We don't know when the war is going to end. We don't know when. All that can happen is one black swan in Europe, and they have gas issues, and then where they're going to start pulling gas from. And then that's if people have no gas, you're not going to be able to run vehicles. Then you're going to really start hampering on supply. Supply is really going to be an issue. And then what do you do then? Right? It's going to essentially tumble into or snowball into a bigger issue very quickly if one thing goes wrong. Like, we are stepping on eggshells at this point. Everything's already cracking and starting to break, but you take one wrong step and the whole floor is going to give out. It's pretty much where we're at. Not to cause panic or anything like that, but my opinion and why I do this channel is partly because of it helps me document and talk about the day and get it out, but it also helps you and educate you on what's going on through what I've learned, and also capitalize on times like this. Yes, cash is king right now. It doesn't matter if you're in crypto, it doesn't matter what you're in. Cash is king right now. And as crappy as that may seem, right now you want to be cash until things play out to an extent, and then you bounce. Are you going to know when exactly? No. I have been kind of talking about should be accumulating shortly, since we've broken down into this level that we broke up here, since we've been floating around this level. And said slowly accumulating. Yes, I do believe we could come down even more. Yes, the average for a recession is 41%. We've only hit not even 25 yet. So you'd still do another 25, and then just imagine what the market's going to look like then. That means whatever meat's left on the bone is going to be completely scraped off, if not even more. I mean, that's just the average, right? Every recession has its challenges. There's been recessions that have gone, right, like the Great Depression and everything else, that have gone extremely deep, 70+% of the market. And then you're at that point is when you wish you would have had cash and you could have bought. So this is why averaging down slowly, not bulk buying these as soon as the next pop comes up. Oh, that's the turn. And that was my concern today, was the market popped and everybody was talking about, oh, this is the turn, this is the turn. And then you get news, red flags. They've already been there. They've been telling us months in advance. You have to let it play out. Now, the market could have reversed. I'll give you that. It could reverse at any time, but you have to be sure. There's too much. Every couple of days, you're getting new pieces of information. And then when you're safe haven, it starts, again, talking about how they have to cut back. That is an issue. So nonetheless, we're selling off. If we open below the 3,800, we're going to flush heavy, in my opinion. I just think if Tesla does bad, that's going to be the nail in the coffin. We're going to revisit 36.36, if not break it at that point, in my opinion. So again, don't panic. Stay cash. Just find other ways to just be patient. Don't force trades. Don't do anything. Don't force anything. Wait until it comes. Wait until it shows you what's going on. Right now, the market has no idea what it's doing. It's a battle between inflation and the Fed, and everybody else is in between and getting crushed. So you have to be mindful of that. So again, tomorrow I think could potentially break that, go down. Uh, there could be a positive news, but at this point, right now, again, it's Fed versus inflation. If we start pushing up, just be ready to take profits, in my opinion. I think that's where they're at. I know we've been trying to get in earnings mode, but this continuous bad information, bad data is destroying the market. So Bitcoin, everybody was going nuts about Bitcoin this morning as it pumped pretty high. It was good to see the 22K mark again. Again, you are still hitting resistance here. We need to break back over this. And again, my opinion, crypto is going to follow the market right now until the Fed figures out what it's doing. Right? I may be wrong. This may break away, but in my opinion, it's going to follow the market until the market hits rock bottom, wherever rock bottom is. Then at that point, I think crypto will accelerate and could potentially break off from where it is now. Bitcoin, I think, will act much like gold, and it's not going to move as much as some of the other cryptocurrencies are, because now more people are getting educated, more people know about smart contracts, and I think at that point, more people will invest in the other coins as opposed to Bitcoin and use, as I said, essentially Bitcoin as a hedge, like they do gold, if there is a cause of concern. So I do really like Bitcoin, though. Still, I think it's still should be in everybody's portfolio. Again, not financial advice, but nonetheless, I don't think it's going to move as much now that people are getting more educated about the space. So with that being said, the dollar is still at 107. The dollar is still extremely high, and I think it's going to continue to push up. Oil is still sitting around $100 a barrel, close to it. I don't think that's going anywhere unless that really starts to fall down. I don't think that's going anywhere. Tesla, obviously for big tech, been playing range, again, rejected. It's not leaving this. I think Tesla won't leave this wedge until we get an answer from the Fed. Even with earnings, I think you might get a nice pop up to here, and then it could potentially wick back down until we get something from the Fed. That's what's going on. I think our pre-earnings will actually come post-earnings, which has happened sometimes. It's very rare. It does happen. I shouldn't say it's very rare, but it does happen, just not all the time. More so you get a pre-earnings run, not a post-earnings, but with a Fed, things have been kind of lining up post-earnings as opposed to pre-earnings runs. So if they do well and the market continues to sell, we could get a rally, some sort of rally after whatever news wears off, right? Once after the flashbang wears off, then the market will settle at that point and do what it needs to do if they do have good earnings. So Tesla, again, trapped in that range of 760 and 660. But you're watching this bottom wedge, it's rising, 677. We could drop all the way down to 67. Now, if it breaks that, you can expect some sort of pullback, retest, and then possibly dump. Again, if it breaks 625, this thing is going to flush hard down to the lower 500s, in my opinion. But we'll have to see how this plays out. Again, there's a lot of stuff that is walking on eggshells, so you got to be definitely have to be careful in this market and what's going on. Let's look at BA. Again, I just want to go over all the general stuff, kind of see what the play is. BA had a monster rip today, and then that news just started selling it off. BA has been holding, a lot of things have been holding really well. And that news today is just, again, more fear of recession. If this thing opens back below 141, do I think it's going to gap down that much? Maybe. It really just depends on the market. This does gap below that. Again, this thing could come down and have some support here at the 134. Again, if the market's going to come down, it's going to come down. When you get panicked, these levels are going to butter. So depending on that, if there is a gap down tomorrow, how far this could potentially go and revisit new lows, I think is very much what could be coming in the coming days here. So we have to see JPM. Again, JPM had horrible earnings, but it tried to rip up and then just completely tanked. Again, if it breaks the 110 mark, could potentially go back down to 105, making a lower low here, I think is a very strong possibility. So really watching that. Goldman Sachs did absolutely great today, and it popped. It had a huge pop today, but then again held at the 105 mark, or the 305 mark, excuse me. Now and again, if the market starts to sell off, if it can't hold the 294, and breaks that, we're going back down to the 280. Now the thing to be watching tomorrow is the banks, and that's where I've been keeping an eye on is watching the banks, because the banks started turning earlier before everything else did, and then it just started tanking, and the whole rest of the market went with it. Then the Apple news came out, and everything just started really tanking at that point. So you have to be really mindful of that and be watching this stuff. But that is pretty much what I got. It's same old junk, different day. Follow me at Hemi137 morning calls. It really gives you insight into the day and what I'm looking at. Aside from that, be safe, play lights, and average in if you're investing in the long term. Aside from that, have a good evening, and I will catch you guys later.